Then Vandana Hari joining in to talk about where crude is headed next. Vandana, hi, good morning. Good to see these prices of crude on the ticker. But do you think one can easily forego that $90 per barrel mark as well? Is 83 to 85 the new reality?
Good morning. I guess what time frame are we talking about? So there's the anxiety-riddled 4 days that I anticipate until the MOU is actually signed, provided it is signed on Friday, as is currently scheduled to be. I think overall, my initial reaction is that we are seeing the light at the end of the tunnel, but we are still in the tunnel. A big question mark in my mind is that if the MOU has been agreed, I presume some sort of a verbal agreement, why the 4-day wait? So, and what can go wrong potentially between now and Friday when it is actually signed? So, a lot of questions for the market in the coming 4 days. I think that will be a period of, I don't see much more sell-off from current levels. Brent around 83, 84, as you were just mentioning, significantly down from the peak, about 11 or so dollars down from where it was on 27th of Feb before the war began, but probably a holding pattern, a lot of anxiety and potentially volatility until the MOU is actually signed.
Vandana, hi, morning. Do you think crude will come back to the $65 maybe in a month or two once the MOU is signed? Or do you see that uncertainty to remain till the time the entire 60-day ceasefire and the final negotiation happens?
Yeah, so let's look at what to expect, assuming everything goes smoothly, the MOU is signed. I think right after that, the market will keep a very close eye on the transits in the Strait of Hormuz. Now, I expect the normalization to take at least 2 to 3 months, the normalization of traffic, and then let's not forget the normalization of return of production. So there's upstream elements there that to keep in mind as well in all the countries that have been affected, the producers within the Persian Gulf, right? So I think it'll take at least 2 to 3 months for that to settle down. Again, a big caveat here is that the reopening continues to proceed normally. We have seen so many false starts over the more than 3.5 months of this war. And there's a lot of big questions still to be settled, not to mention the very, very contentious nuclear aspects of the agreement, which are to be discussed over the next 60 days. There's the Israel-Lebanon angle. So we cannot assume that it will be an uninterrupted and smooth start. Beyond 3 months right now, I think it's really hard to see. It will depend on how this reopening goes. But $60, $65, I don't see those kind of levels anytime this year and potentially not even in early 2027.
Taken, Vandana. Now, let's assume for a moment that the reopening is smooth. How quickly can supply chains rewire themselves? There's also been some bit of utilization of strategic reserves, especially Japan and the like. They were all chipping in. What will now the new order look like in terms of crude demand, maybe over the next couple of months?
So I am not in favor of calling what happened to demand destruction. I don't think we came anywhere near that over the past 3.5 months. It was probably demand erosion, some sort of demand being curbed, especially in jet fuel, airlines reducing the flights and so on, a little bit in diesel, not much in gasoline, a little bit in naphtha and feedstocks in petrochemicals. I expect all of that demand to be sort of a combination of curtailment being a combination of high prices, of course, so poor margins. So that curtailed demand, and some of it was due to government policy. On both those aspects, I expect demand to start coming back up very, very quickly as prices normalize, and provided the around current levels or continue to go lower. So the big question now will be how the return of this demand balances with the return of supply, especially since I do not expect the other buffers to remain in place, which was the release of SPR. I think there's no question of more SPR releases once this reopening begins. And Chinese buying was curbed quite substantially over the past couple of months. I expect that to return as well. So I think that the next phase in the market over the next 6 to 9 months will be how this balance comes through the return of demand versus the return of supply through the Strait of Hormuz.
Okay, Vandana, great to have you on the show today. Thank you for your time.
Thank you.
Okay.